Welcome to the School of Economics and Finance, and today we are delighted to welcome visiting lecturer, Dr. David Norman. David, welcome and thank you for today. I'm going to hand immediately over to you for you to tell us more about the fantastic Bloomberg Terminal.
Excellent. Yes, thank you very much, Ashley, and good afternoon to everybody. I run the finance trading program at Queen Mary School of Economics and Finance, and this program's been running for 10 years, and the objective of the program is to form a bridge between academia and the real world, whereby we teach how to use financial market software. We teach all the ways to trade, risk manage, portfolio manage, and do various industry tasks that students will be going into when they leave the university. So it's giving them skills that they can use when they go into the workplace. And what I want to do today is to open up Bloomberg for you so that you can actually see how we go about teaching these skills and why software like Bloomberg is very important for what we're actually teaching. So what I'm going to do, I'm going to share the screen with you, my screen, and you will then see the Bloomberg terminal in front of you. And this particular piece of software, Bloomberg, is used very widely throughout the industry. We've got, I think, something like 330,000 users around the world, according to Bloomberg, and also the functionality of Bloomberg is very, very rich. They have 30,000 different functions, and we go through many of these, not obviously 30,000, but we go through all the important functions, and we look to try and create several things with the students that go through the finance trading program. Now, one of the foremost things we try to create is market intelligence. And this is a very important thing for students to gain, especially if they go into the industry where they're going to be expected to have a level of understanding of financial markets from a very early stage. So we use Bloomberg, for example, as in our classes to talk about what's happening in the industry. What is the market doing today? How can we tell what's going on beneath the surface? And a lot of information about the news, market updates, all kinds of things. So I want to just go through some of the things that we do. Now, what you see here is a page that gives us the indices. These are the stock indices for America and the European Union, places in Asia and Asia Pacific, the Nikkei, the CSI 300 from China. And you can see that there is a constant update in all the prices that are coming on here. So you can see, for example, that the FTSE 100, the UK market, is up 100 points today. And if you look to the right-hand side, you can see levels of movement over the actual year. So we can see that the FTSE is down 17.14% on the year to date. Now, if I click on FTSE 100, and you'll see immediately that all the business sectors come up and how they're performing today. Now, when you learn trading and you're learning about financial markets, you look at equity markets to give you indications of whether or not trading is risk on or risk off. These two conditions change throughout the trading day. So, for example, we can see today that the market is very much risk on, and certain sectors outperform during periods of risk on as opposed to risk off days, where you have a much more a market that may be falling. So the market's up today, and the sectors that are outperforming are the normal sectors that outperform during risk on days. So the industrials, the technology stocks, consumer discretionary stocks, materials and communications, etc. Now, the ones that don't perform well are the more defensive stock sectors, and these include healthcare, utilities and real estate. So if we look at this particular page, we can see that the sectors are in the right kind of alignment for a particular day like today, when the markets are embracing risk. Money is going into riskier assets because of the likelihood of an increase in activity in those sectors. So we can also drill down into which stocks within each sector are outperforming. So if I want to go, for example, to the industrials, and let's say I start to click on the pie chart, and I can see that we've got electrical equipment, machinery, aerospace. Well, let's have a look at aerospace. I click on aerospace and keep clicking until I go down to two particular stocks that are in this sector. So I've got British Airways and I've got Rolls-Royce. So let's click on Rolls-Royce, and I then get a number of different options for me to look at its behavior. So what I'm going to do initially is I'm going to go to the financial analysis. So when we're in the finance trading program, we are using a lot of the financial analysis techniques for looking at how companies outperform and underperform in terms of their profitability, their revenues, all kinds of activities. So we can see very clearly that there are several different areas that we can look at in terms of the financial statistics of that company. So I can look at the income statement, the balance sheet, the cash flow. If I just click on cash flow, you can see various levels of cash flow here, and also the more importantly, particularly in this time where we have such a crisis, is the level of free cash flow that's available to the company. And if we look on the right hand side, we can see their level of free cash flow is pretty impressive. So Rolls-Royce looks to be in a position of reasonable strength in terms of its balance sheet. Now, we can also then start to look into what Rolls-Royce is doing in terms of business. We can look at the company news. We can go to CN, which will give us individual company news. And we can then drill down into what Rolls-Royce is actually doing and why we should be, perhaps for investment purposes, interested in this particular stock. So we introduce in the equity component of the finance trading program things to do with particular stock analysis and evaluation, and we're also looking at how to really help students to get used to evaluating stocks using particular methods. So we can look at graphics as well. If we go to GP, we can look at the line chart. So this is the chart of the actual stock behavior, and Rolls-Royce was hit quite hard during the period of the economic of the lockdowns, because obviously it's related to the aerospace industry. So this company did have quite a difficult time. And if we look at a comparison between the Rolls-Royce and let's go to the FTSE 100 as a whole, we're comparing this as a benchmark to Rolls-Royce. So the FTSE 100 has outperformed Rolls-Royce, which means that we would then consider, if we were putting together investment proposals or we were looking into how to value stocks, is Rolls-Royce undervalued? I mean, that's one of the considerations we would be discussing in classes. So from an equity point of view, it gives us a very good tool. Bloomberg provides us with this tool to be able to do some analysis. Now, other things that I would be teaching in the classes are linked to increasing the level of market intelligence, which also means we look at economic calendars and what's going on in terms of the statistics coming into different countries. So if I just keep with the UK and I go to United Kingdom, I can see that there have been there are some announcements coming out next week, but we can go perhaps instead of that to the Eurozone and have a look at some of their announcements coming out. So we can see there's been quite a few different economic announcements coming out over the last 24 hours. And we can see that things like consumer confidence here at the bottom. If we want to click and have a look at consumer confidence index, this is the Italian consumer confidence indicator, which shows an increase. So this is a better sign for the Italian economy. And now we can use that information to go and check what's going on with other Italian assets. So for example, if I type in the letters WB, that automatically takes me to the world bond markets. And we can then go to the Italian bonds. On the left-hand side, you see there's a range of different countries with all their main benchmark bonds on the right-hand side, with the right, what we would say maybe the 10-year bonds. So if I go to the BTP 10-year bonds, I can then have a good look at the price of that bond and then see that the bond has gone up quite strongly from the middle of April. Now, the other thing I can do is look at the yields of these instruments. So if I type in GC and go to graph curves, I should be able to see the bond. There's the bond. So this is the Italian sovereign bond curve for the yield of those bonds. And you see here a time series of different yields for the bonds. Now, what's important, obviously, is not just looking at instruments in isolation. So we're also comparing different assets. And the one that I want to really compare right now is the Italian sovereign bond curve with the German sovereign bond curve. Now, both of those nations have very different curves. And if you look at the German curve, you can see that most of the bonds going out for the next 30 years, in fact, all of them have negative yields. And you can see that the Italian bonds have positive yields. Now, when it comes to bond yields, normally the more risky bonds, the higher risk in bonds creates higher yields. So we can see that the relationship between German bonds and Italian bonds is telling us that there's a big difference between the riskiness of these two assets. So this also means that we can think about other types of assets that are important to understanding Italy's situation relative to Germany. So students build up a very good idea of how countries are, their assets are behaving. They look at the yields of the bonds in relation to other bonds, and they can look at to build up this level of market intelligence. So we're using assets across the board. And one of the assets that I do look at very often is it's all related to the commodity markets. So some of you may know that commodities have picked up off the floor. If I look at copper, you can see that the copper active contract, which is a futures contract, if I put the actual line chart up so we can see how copper is performing, you can see from the chart that from middle of March, really towards the end of March, copper's been coming up in terms of its recovery, its price recovery quite quickly. Now, copper was impacted very quickly because of the slowdown in economic activity. And most of the commodities, including oil, were impacted adversely by the sudden lockdowns. But copper has recovered. And it's interesting for students to think about why. Why are the commodity markets recovering? Well, one of the reasons is that the economic expectations are improving. So China is very much open for business. China is one of the biggest users and end users of commodities in the world. So we're seeing a lot of demand coming out of China for commodities. Now, copper, for example, is definitely a metal that's used in industrial processes, in construction. It is very much a benchmark for how financial markets, in particular, economic situations are viewed. So we would look at copper as a leading indicator. for how economies are recovering. And we can also do some comparisons. For example, there is one metal that is outperforming extremely strongly at the moment. And I don't think you'll be surprised when I put this one up, but it's the gold price. So if we put in the gold cross with the US dollar here, you can see that gold is actually outperforming copper. So we know that gold is in demand currently at the moment as a safe haven asset. And we discussed in class why gold is in demand for other reasons as well. For example, gold is a pretty good hedge against inflation, so that when commodity prices start to rise, it normally is inflationary. And we see the movement of commodities as early indicators of demand, economic demand, effectively. So we then have quite a lot of expectation for inflation to rise. Now, we know that inflation is extremely low at the moment. And in fact, in many countries, inflation is negative. So looking at commodity price rises suggests that perhaps we may see a little lifting of inflation over the next several months. Now, as many of you probably know, financial markets tend to be a little step ahead of the main economic conditions. So copper here, for example, may well be showing us that the economic recovery is underway already, and the shoots of economic recovery have begun to grow. Now, obviously, we know this all is affected directly by the COVID-19 virus. And from here, that markets are at the moment showing a level of appetite for risky assets because they're discounting an improvement in economic conditions. So we discuss these things in class, and we look at these behaviors of different assets as we go through. So Bloomberg is very central to the way in which at SEF we look at discussing markets and building up market intelligence, and for students to really take control of what's going on for their own education as well, because they can come and use the Bloomberg terminals in the dedicated trading room. Obviously, at the moment, this is not so easy, but we do have opportunities for them to do this. So the program which we run is basically a 3-semester program, and it provides real-time access to software packages like this. Also, it provides a forum for students to experiment and to look into how to use platforms they're going to be using in the industry. Now, one of the very interesting areas that we've been discussing recently in classes is the portfolio section. And for students that want to get into analysis or asset management, the portfolio and risk analytics section is extremely useful. And we can see that I'm loading the port function, which gives me a way to be able to look at portfolios and do analysis on them as well. So we're able to, I mean, it's just retrieving the data for this particular portfolio, but there are several things we can look at, including the holdings of the portfolio, the characteristics, the value at risk, and the scenario. So I've got a few instruments in this portfolio, nothing particularly, it's not a very big one. I've got Alphabet, and I've got Apple, and I've got the DAX index, so the DAX itself. Now, I can look at scenarios, for example, and we can talk about in class how my portfolio in this particular aspect would have performed during economic shocks. So everything from big rebounds in markets to financial problems, for example, in the Eurozone with Greece in the early 2010s, the oil shock in 2011, Russian financial crisis, etc. There are lots of scenarios that we can look at and observe how this portfolio would have fared. We can look at performance analysis. And what we can also do is we can back test strategy. So BTST allows us to go to back testing. And this means that we can run a number of simulated trading strategies against our portfolios. So students learn how to manage assets properly, and then can use their experience to be able to formulate portfolios and back test particular strategies. If I look at this portfolio, in fact, what I'm looking at here is the copper price, which is defaulted to the back testing section. So all of these different strategies that are pre-programmed into Bloomberg, we can have a look at some of them and just literally just click on one of them and you can see the whole strategy itself. So it's a very useful tool for students to be able to build up an understanding of how their particular strategy would fare in different market conditions. So it's an excellent tool for that in particular. Now, we also have other areas that we can look at. There are the FX currency. So we can look at the information portal for the FX. We can look at various currency pairs. Now, obviously, a currency reflects, by and large, the activities within the country in terms of interest rates. Now, we start off, for example, on a class talking about interest rates, and then we can go directly to a particular country, like let's go to the UK. And we can then see a breakdown of the different relationships between the pound and all the other currencies. So we can see all the different spot exchange rates. And we can also see news coming up beneath here. You see there's a news function that gives us information and news that's related to the pound. And other things we can do, we can actually go to the Bank of England homepage on Bloomberg, which gives us the current level of interest rates. You can see that the current level is 0.10, and we can look at specific Bank of England information. We can then decide what to look at. There's plenty of things we can see on the left-hand side here. You can look at the asset purchase facility. You can look at the forecast for GDP and CPI. That's inflation, obviously, and numbers of things that are related to that. But one of the big questions in the financial markets currently, and one that we really cover in the classes, is what is the interest rate probability of change. We have a particular page on Bloomberg to go through and have a look at this. So the world interest rate probability page gives us indications of the likelihood of an increase or a decrease in the next monetary meeting. So if I go to GB, and it's telling me that the current level of rates is 0.1. This is giving an effective rate of 0.06. So interest rates in the UK are very nearly negative. And this is something the Bank of England has been discussing. But we can also have a look at things like all the meetings and the expectations of increases or decreases in the number of hikes. So we're not looking at seeing any increase in interest rates currently scheduled for the next meeting and the one after. So this is always very useful for us. Now, as you remember, when we looked at the bonds, bond yields reflect the underlying interest rates in the countries that they belong to. So we can see, for example, by looking at this particular page, the yields in the middle, there's a column in blue. You can see what the implied interest rate is according to the bond yields of different countries. Now, you notice that there are at least 5 countries that have negative interest rates already. You can see that the bond yields, this is the 30-year Treasury bond in the UK. You can see the bond yield is 0.173. So that shows that the yields of the bonds are showing a very low level of implied interest rates. You can also see that France, Germany, the Netherlands and Switzerland have negative implied interest rates, looking at bond yields. So this is a very serious situation for the Eurozone. And if we look at the ECB, which is the European Central Bank homepage, we discussed in class what it is about the ECB's program and their monetary easing that has caused interest rates to go to zero officially and negative. For example, if you look at the page here, you can see the main refinancing rate is zero, and it's been zero for a number of years. You can also see that overnight interest rates are negative, 0.461. You can see the futures implied rates are also negative, and the deposit facility is minus 0.5. Now, this is a very important interest rate because it looks at institutional interest rates for overnight lending. So it's a very serious situation for the ECB when it comes to trying to manage the recovery of the economic conditions in the Eurozone. And they currently have extremely low interest rates to try and encourage that. So all of these things are discussed throughout the classes. We have a very good structure to the classes, so we cover different instruments and different trading strategies and different approaches in each of the classes. And it means that we're able to really give the students a good understanding of how they're going to use their studies and their education, how they're going to use it in the real world. And this is what's important, is the transition from academia to industry. So this is what the finance trading program actually does. So as I say, this is used throughout the year. Bloomberg is used throughout the year. And we look at building up understanding from very early stages where we're just covering very basic functions to very intricate functions towards the end of the period, including some of the portfolio analysis functions, which can be quite demanding. Now, the other good thing about using Bloomberg is we can download this data directly for research. So students that are undertaking their dissertations, they use Bloomberg for data. And the data is easily downloadable into Excel using Excel add-ins. And there's other ways in which we can download data as well. So I hope that's been useful for you as an indication as to how we use platforms like Bloomberg in the finance trading program and in the classroom as well. And I hope that this will be of interest to you in the future. So thank you very much for your time today.